What's up, everyone? Okay, so I'm going to show you the actual email that I had sent to a gentleman named Rob. He was a lawyer that I had spoken with about some potential market manipulation regarding the ADF facility. And I'm also going to show you the presentation itself that I sent to him and the conversation that I had via email, and give you some more insight as to what the ADF is and why there was a concern to begin with. So you may learn something in this one, but I thought it would be interesting for you to see the actual email, and I'm not making it up. I actually did reach out and get in contact with somebody as far as a lawyer to discuss this situation that we have going on with the ADF. And to no avail, after I had sent the presentation and everything, never heard back. So let's take a look real quick. So here's the email that I had originally sent after I had gotten off the phone. He had called me, and then we had talked briefly. I explained to him some things over the phone, but I had mentioned that I had a presentation that I wanted to send to him, which had a lot of evidence corroborating my claims, and to give some background and everything on what I know about the ADF and why I think there's some shady activity going on. So the email read that I had sent after we spoke, and this was sent on Friday, July 9th, 2021 at 2:13 p.m. Central. I said to Rob, I said, "Hello, Rob. This is Charlie's Vids. We spoke on the phone earlier regarding some information relating to potential market manipulation. I appreciate your time and will provide a link to PowerPoint presentation that outlines the timeline of events, as well as some text and a couple of screenshots." And these are things that he requested on the phone when we had talked. And I said, "Here's the PowerPoint." I sent him the link to the PowerPoint. And then I also sent a premise, for a basic understanding of what I was trying to explain. And basically, this is what the premise said. Said the ADF facility was rushed into completion around the same time NASD and NASDAQ became separate entities way back in the early 2000s, immediately creating conflicts of interest, which was further corroborated by a bunch of different comment letters written by multiple market participants all across the industry. Soon thereafter, the ADF program went from a pilot program. It was initially on a 9-month pilot to a permanent program, and this was later on in the 2000s. And being a predecessor of the FINRA, or the FINRA Association, the National Association of Securities Dealers, or NASD, was a regulatory organization that oversaw the securities industry, including the NASDAQ. So the NASD was a predecessor to FINRA, the entity which is now responsible for the operation of the ADF facility itself, and who also oversaw the NASDAQ. And in 2007, the year NASDAQ merged with the regulation, enforcement, and arbitration arm of the NYSE. So in 2007 is when the NASD merged with the regulation, enforcement, and arbitration arm of the New York Stock Exchange to form FINRA. So now you see it's like a multiple faceted entity that's basically a combination of several different entities that already existed. So FINRA now has regulatory control over the ADF, merged with the original entity pushing for its permanence, and handles all complaints and resolutions regarding the facility itself, as well as reinterpreted the rules, which I have included in the following presentation. If you have any questions, please let me know. I am determined to get to the bottom of this, and I look forward to potentially working with you on this. Thanks, Rob. So that's the email that I had sent to him after we spoke on the phone, and I never heard back. We're going to take a look at the presentation real quick, just to show you what was in it. And I did make videos on this as well. This is just basically the same PowerPoint that I had gone over in the video. And I believe, I think I put the screen. Yeah, there's going to be screenshots in here too that you can see from actual market happenings back in the day. So let's take a look at this real quick. NASDAQ super montage and the ADF facility, part 2. So this is a screenshot from a Bloomberg terminal. And let's see, is there a date on here? There's no date that I can tell. But remember, I sent this on July 9th of 2021. So it was likely around that time. But this is clearly showing right here from a Bloomberg terminal itself that the UD, this is the exchange breakdown, the FINRA ADF is the number 1 with 1 million paired volume. And the next closest one being the CBOE EDGX, it's not even half as much as the ADF was. And then the next one behind that was the New York Stock Exchange, and then NASDAQ Intermarket, and then NYSE ARCA, CBOE BZX. But none of them are even close. If you add up together the EDGX exchange, the New York Stock Exchange, and the NASDAQ, then you get as much volume that was executed out of the FINRA ADF, but yet it's not used. We're going to update the rules for it. We're going to trade out of it and post quotes from it, but we're not an exchange and we're not an operation. Right. So that was the first slide here. Next one, it's like, Rob, the next 4 slides provide context. I typed everything myself and put this presentation together myself. On July 26, 2007, the market started its fragmentation process involving liquidity and market share when FINRA was formed by consolidation of the member regulation, enforcement, and arbitration operations of the New York Stock Exchange, New York Stock Exchange Regulation Incorporated, and the NASD. Prior to this occurrence, the alternative display facility was implemented on a pilot basis. It wasn't until after this merger that the ADF facility was implemented permanently, and all previous rules were superseded by FINRA, the SRO governing the very facility itself. I'm fully aware of supermontage and the fact that ADF was a contingency based on the implementation of supermontage, as the participants during that time did not want the supermontage instrument to be mandatory. That would have messed their game up. They wanted it to be voluntary, which they successfully lobbied for and got to be amended, which the other industry members were furious about. There were several comments opposing this, all of which made very strong arguments against the implementation of this facility and the governance of such facility by the SROs that clearly present clear conflicts of interest. For example, FINRA Rule 6220, which is entitled Review of Director or Indirect Access Complaints, states in Section A, which is authority to receive complaints, in paragraph 1, we have, for the purposes of this rule, a direct or indirect access complaint is a complaint against an ADF trading center as defined in Rule 6220 that alleges a denial or limitation of access in contravention of Rule 6250 or the federal securities laws. Paragraph 2, any registered broker-dealer that wishes to file a direct or indirect access complaint shall submit a written complaint stating that the pertinent facts that constitute the grounds for such complaint via fast mail, email, personal delivery, courier, or overnight mail to FINRA market operations and simultaneously serve by the same means the ADF Trading Center in accordance with Rule 9134B. Officers of FINRA, designated by the Chief Executive Officer of FINRA, shall have the authority to review and make a determination regarding direct or indirect access complaints. So what does that mean? Basically, what that means is that this is clear evidence of conflict of interest, as any complaint against this facility or FINRA, which is the SRO governing the facility, can only be taken into consideration by those entities that govern it. Even if a complaint were to make it through, it would still have to undergo scrutiny from the CEO of FINRA, presenting further conflicts of interest. So it's multi-layered bullshit, basically. And it's all, controlled and regulated by the same people. Reading the comments expressed concern of its implementation that were of concern back during that time, and they have come to fruition in today's markets. Obviously, if you look at recent filings that have come out, not only this year, but last year and the year before that, there are several filings, and it's every lit exchange that you see other than the TRF and the other FINRA-owned exchanges are filing, and they're clearly saying we need more market share. And right here, it's evident because you see this exact phrase in most of these filings regarding market share. We're going to get to that in a sec, but no exchange has more than 16%. No lit exchange has more than 16% market share on a daily basis. And the only one that's near that, the only two, is NASDAQ and the New York Stock Exchange. So again, the fragmented market is self-induced, and there's so much going on under the scene, and there's so many hats being worn by so many different people, and they're just putting on this big ass show. It's ridiculous. The lack of supervision by the authorities that are supposed to be in charge of policing such fragmentation have done nothing whatsoever to remedy the situation. It gets worse daily, and again, as stated by SIBO Box Exchange LLC and many other lit exchanges in regards to several rule filings this year, have stated that competition is scarce as most of the volume is executed off exchange and behind the scenes, which is evident based on the evidence that we see in, for example, AMC ADF trades. Now, what I've noticed just by watching them from today and yesterday is that there's so much more AMC going on than GME in those ADF exchange trades. I'm not sure why that is. I just think that's interesting. Maybe it's due to the size of the float, or maybe it's due to the demand, because there's clearly more AMC people than there are GME people, I think. I think that would be fair to say. But it's just interesting to see this from a data perspective, and it's interesting to see all of this going on, and it's interesting to see these filings coming out describing the exact problem that's being caused by this facility that is owned and operated at the time of this presentation by JP Morgan and Jane Street Capital. That has actually changed to only JP Morgan is the sole operator of this facility at this point in time. Now look at the banking stuff that just happened. I wonder if there's any inkling of a possibility that somewhat of an effectual cause of JP Morgan and this facility being in cahoots maybe played a small role of why JP Morgan was one of the only banks to survive these, basically these fire sale of assets, dog shit. But, it's all planned. It's all planned. This is all being carefully done, and it's being done on such a cooperative effort level from so many different governments around the world. It's really actually kind of incredible. So we'll have to wait and see what happens in the long run. But as far as the ADF is concerned, this is what I was trying to get across to this guy, and I showed him all this stuff, brought up all this evidence, showed all this presentation with screenshots from their own rules that they've written themselves, pointing out how a lot of this stuff doesn't add up, which is corroborated by other commenters trying to explain the same concerns. So you have a private facility owned by a private organization with only 2 listed participants at the time, JP Morgan and Jane Street, which is now just JP Morgan, that accounts for over 40% of daily market share. There's your problem. And I told him this is unacceptable and a large cause of why our markets show such a large gap between off-exchange and lit exchange volume, which is clearly evident if you go look at the SIBO market share graph, for example. It's publicly available data. It's not hiding anywhere, and it's right there in plain sight for you to see. Now, this is evident during the intraday trading hours as well, as by using the publicly available data based on the UTDF and CTS consolidated data feeds, I have several documented screenshots captures of the ADF facility affecting trades in predatory ways, such as quote stuffing, quote spoofing, and price manipulation. There are 2 main entities that are monopolizing the free market that is being so shamelessly ignored on a daily basis, while retail investors are finding many areas of concern without ever leaving their homes. FINRA, the ADF facility, verified by Bloomberg Terminals, SIBO market share graph, and many other sources. It's apparent that the ADF facility is the largest entity regarding market share and volume on a daily basis, as far back as the data allows. Since 2015, using SIBO, the ADF facility has done nothing but continue to eat up a majority of the market share, peaking at over 50% in a single day on January 27th of no other date, 2021. So, simulation or coincidence or planned bullshit? I don't know. But it sure is fun to look into this stuff and find out. And then point 2 here, FINRA, the TRF Carteret facility, which is another thing that goes hand in hand with the ADF, which is the second largest entity on a daily basis. The TRF Carteret facility accounts for over 30% of all market share on a daily basis. This is devastating to our markets and has led to the fragmentation of liquidity on exchange, as most trades occur off exchange, as the SEC is well aware of, and as many lit exchanges have notified specifically in the rule filings to these exact problems. And I put here that I've documented PowerPoint presentations covering over 100 rule filings that surfaced this year. Point number 3, the TRF Carteret facility reports consolidated NMS volume on a daily basis and is easily verified. However, the ADF facility does not. FINRA has a section on their website labeled ADF short volume that is always 65 kilobytes in size and is always reported at 0. Based on the evidence in my possession, without a shadow of a doubt, the ADF facility is the single most destructive entity in the market, and such little is being reported. Bloomberg Terminals confirmed that trades are executed at this facility, despite FINRA saying otherwise. I have a Bloomberg Terminal image from July 1st, 2021, that shows the ADF facility accounting for more volume than every other exchange combined, with almost the with almost double the amount of trades executed than the second most exchange. And then lastly, I said, my question to you is this: how is it that several retail traders, such as myself, are able to identify these blatant predatory actions? Because we live through them on a daily basis, and the amount of people losing faith in this broken market is growing exceptionally. It's clear, based on decades of incompetence, it's time to change, and fast. Our markets are becoming more and more fragmented, less transparent, and the general public has absolutely zero faith in the organizations such as FINRA, who shroud themselves in investor protection while at the same time contribute to the destruction of the market more than any other entity. Again, the evidence is all over the place in various forms, and it's absurd that the SEC, the DTCC, and many of the organizations designed to protect investors are actually, in fact, the ones scheming against them. Please investigate the ADF facility. The sanctity of markets relies on it. No SRO, which means self-regulatory organization, should be allowed to resolve its own complaints, account for the most market share industry-wide, as well as not disclose information to the public. There's absolutely no checks and balances, and the people are sick of it. This has gone on for way too long, and this can be for one of two reasons. Number one, the current leaders don't want change and are all a part of the problem. And then I put most likely in parentheses. And then number two, the leaders that want change don't know how to go about doing so. My best advice to the commission is as follows. I've been living in these conditions for far too long, studying these blatant acts of predatory actions, studying the fragmented sources of our market that I see day in and day out multiple times a day, and have came to one conclusion. Nobody wants to change because it would go against their own personal interests, and it isn't just me. Hundreds of thousands of Americans are waking up to the blatant manipulation that's apparent industry-wide, and the longer that this goes on without anything being done, the worse the situation is getting. Work with retail. Don't make the mistake of underestimating us. Clearly, the people in charge, and who have been in charge for a while, have been taking advantage of payment for order flow for quite some time. It doesn't take a rocket scientist to figure out that Bernie Madoff was the pioneer of such a scheme. 6 months ago, I knew nothing about markets other than I thought that they were free. Today, that is the furthest thing from the truth. The only entity that would disagree would be part of the problem. Help us get our markets back. Help us show you what we see and how to get there. We know a lot more than you think. This ADF facility must be investigated, and it needs to start with its implementation. Please refer to release number 34-52122, file SR-NASD 2005-092, FR 2006, April 28th, as a starting point. Please do what's right. It's likely you already are aware of this. There's too many eyes on everything in today's times to pretend like we're all dumb. I've watched Gary Gensler's MIT blockchain courses from my home. Anything is possible. Let me help you. Damn, I was like fucking cocky as shit back then. Must have been baked. Anyways, okay, so, and then I sent this slide here, which is basically the NASD rulemaking, NASD ADF rules and procedures from 2002. Basically, there was a self-regulatory organization, a notice of filing, a proposed rule change by the NASD that proposed separation from the NASD and the establishment of the NASD alternative display facility. So they, at the same time they separated, they created the NASD ADF. And then the substance of that, if you want to pause it and read it, I'm not going to read it verbatim because this video is starting to take a long time. But basically, there's a lot of reserved sections. Violations of Rule 2110 is reserved for the IM-2110 rule set, which was preceded or superseded by the FINRA rules. And then these are the FINRA rules that basically we're talking about fair dealing with customers and front-running policies, things like that. If you want to pause this slide and read this, go right ahead. This was back in February of 2009. And then this one's interesting. Exceptions to the general prohibition. Automated updating of quotations is permitted when the update is in response to an execution in the security by that firm, such as execution of an order that partially fills a market maker's quotation size and is in compliance with Rule 4613B2, which I referenced right here. And then this rule, when you look it up, has been superseded by FINRA Rules 6170 and 6272. And then if you go look at those superseded rules, these are those superseded rules, and they have changed them enough to make it to where they can get away with more crime, basically. And guess what? Just like everything else, remember, who could handle the complaints? FINRA did. Who governs the ADF? FINRA does. Who's all a part of the cahoots? The NASD, which is also FINRA, which is also the New York Stock Exchange. Who gets to decide now how this is all handled as far as clearance and settlement when it comes to the ADF? FINRA. An ADF trading center whose quotes are open before 9:30 a.m. Eastern Time or after 4 p.m. Eastern Time shall be obligated to comply while its quotes are open with all FINRA rules that are not by their express terms or by an official interpretation of FINRA. So they're in control of it all. So I thought you'd find that interesting. Look at this order here. This is from, I believe, this is a GameStop order that was above ask. It was for 235,200 shares from the ADF in after hours. And if you look at their own rule here, it says the minimum quotation increment for quotes of $1 or above in all ADF eligible securities shall be 0.01. The minimum quotation increment for quotations below $1 in all ADF eligible securities shall be 0.0001. Quotations failing to meet this standard shall be rejected. So look at this. It came in at 47.95. Look at the two preceding trades next to it. It's 47.54 and 47.53. So this clearly executed outside of that range, which is what I was demonstrating in this photo. And this next one here, look at this. This is GameStop trading July 7th. Unfortunately, most manipulation, I think the last one was actually AMC. Sorry. This one was GME because I forgot AMC was at those $40 levels at that time. So yeah, this picture here was AMC. And this one here is GME. Unfortunately, most manipulation that occurs on a daily basis is market-wide, but this most noticeable on stocks with high retail interest, likely due to PFOF incentive for rebates. But anyways, ADF here, you had two, and the price drops 44 cents. You have a buy order here. The price goes up, just a few cents. ADF here for 5, ADF here for 2. And, if it's display only, then why is it coming in as a sell order? That's what I'm saying. That's the whole point of this screenshot. Why is this showing sell side market if there's nothing being executed out of the ADF? I mean, I don't know how you could get away with denying any of this, which maybe is why I didn't hear back. And then you have this, which is broader market manipulation using algorithms. This is just a bunch of different charts. These are all different stocks that all look the same because it was all being controlled through very, very dense collateral trains of ETFs back then. Which is why you saw stuff like this happening. More so back then than you do now. You still see it now, but not as clear as day as this. And then here's the clear screenshot of the market share that's basically been this way since 2015. You can see here that the NASD ADF accounts for 41.51% of market share. Right there, clear as day. It's publicly available info on the SIBO website. Then you have the comments of concern from the different commenters in regards to the rule filing that was coming out to, implement the ADF permanently. One commenter said here that access delay would make it easier to manipulate markets by taking advantage of stale and inaccessible quotations displayed during the quotation of any access delays, and that such manipulation behavior could be particularly powerful in relatively illiquid stocks, which is basically everything right now. And then you have another commenter that explains some concern. That's actually the same thing. Stale prices that are guaranteed to be displayed for a specific period of time, up to 1 millisecond, which would cause pegged orders on other exchanges to be traded against at known stale prices, when such pegged order is pegged to the stale price on the exchange with the access delay. Then the commenter argued that this could lead to a potentially new mechanism for spoofing orders. So, there was people in the industry that worked in the industry that were exclaiming the same things that I was trying to say here in this presentation, that, this would lead to new methods of manipulation because it gives so much different conflicts of interest to these groups that are essentially in the same objective goal. It's insane. The Commission is updating its prior interpretation in light of technological and market developments since the adoption of Regulation NMS in 2005. So they're telling you right there, since the Regulation NMS adoption in 2005 came in to try and stop all of this spoofing and this naked shorting and this all of this neutral volume that you see market wide, then you all of a sudden get the ADF implemented, and there's always some mechanism that gets them out of it, and it just gives them another avenue to keep cheating the system. And that's exactly what they did in Europe. Whenever Europe made a ban or put a ban on the dark pools, they put a volume cap on the dark pools. They came up with these systematic internalizers. So they're always finding ways to evolve and adapt around this regulation that's coming out, and it's clear as day. The SEC response to this was that they approved it. In response to technological and market developments since the adoption of regulation NMS, the Commission believes that it's appropriate to provide an updated interpretation of the meaning of the term immediate in Rule 600b3. And then interpret Part 241 of that rule, which is interpretive release relating to the Securities Exchange Act of 1934 and general rules and regulations thereunder. They went ahead and they amended Part 21 by adding release number 34-78102 and the release date of June 17, 2016 to the list of interpretive releases. And then here's another screenshot of the FINRA short volume section that I was referring to earlier in the video. You can go look here yourself. They post every day. It's always 65 bytes and it's empty every day. Why even have this section of data on your site if it's going to be empty every day? But then at the same time, you go to a partner or a similar exchange like SIBO and you look at their market share graph, and you can clearly see on this particular day, which is July 10th, 2015, I believe the earliest day that you could go back and look at these market share percentages, 35.93%. It's only gotten worse since then. Way worse. But yeah, that's basically it. This was a long one, but hopefully you learned some stuff about the ADF, because there's a lot that goes into this stuff, but it's really interesting to learn about. And yeah, and I'm pretty gay. Let's go, Brandon. That's about it. Interesting stuff.